Welcome everyone to this panel on making the most of artificial intelligence, how to foster diffusion and address risk. So let me first introduce the different members of our panel. I will start from the back. We have Filiz Unsal from the OECD. Then we have Bertin Martens from Bruegel, Markus Brunnermeier from Princeton University, and Fidelio Börm from Medimir. And the way we are going to organize the panel is I'm going to make some brief initial statement, and then I will ask each of the panelists to make a 5 minutes presentation, and then we will have some questions and answers, and hopefully this will be a dynamic and engaging panel. This morning, Jonathan Haskell made a very nice analogy between the steam engine and artificial intelligence. He has a little bit of a bias. He's British, as you can tell from his beautiful accent. When I think about the industrialization, I think about a classic book published exactly 50 years ago called The Failure of the Industrial Revolution in Spain by a great economic historian called Jordi Nadal. Jordi Nadal argued that Spain failed to industrialize in the 19th century and that failure shaped the whole political economic dynamic of the country for the next 200 years. In fact, you could even argue that even today, Spain and its politics is fundamentally shaped by that failure. But you don't need to say Spain. You could write a very similar book about Portugal, the failure of the Industrial Revolution in Portugal. Or you could think about the failure of the Industrial Revolution in the south of Italy or in the south of France. In fact, most of continental Europe didn't do a very good job at industrializing. And though I know that Bertin is going to tell me that Belgium did okay. Even here in Germany, another great economic historian, Alexander Genschenkron, brought what I think is still one of the most insightful analyses of the economic policy of the Second Empire and the Weimar Republic, and he highlighted that the political economy of Germany was fundamentally shaped by the tensions and trade-offs created by the fact that Germany industrialized late. Later on, a third great economic historian, and now we are jumping to England, Millward, argued that the whole process of the European Union integration, and after all this building and the European Central Bank is part of it, was precisely a consequence of the failure of continental nation states to handle the challenges of economic modernization. When I think about that, I ask myself the following question. Will an economic historian in the year 2300 write the failure of the artificial intelligence revolution in Europe? We will have 200 years from now panels and sessions about why Europe missed the artificial intelligence revolution, or maybe not. Maybe we will never need to write such a book. But the point is that whatever the answer is to that question, our economic future is going to be so fundamentally transformed by artificial intelligence that it's going to go much beyond GDP or employment or inflation. It's going to completely transform or not transform society, and that's going to have very large consequences. So without further ado, let me jump to the panelists and let me ask for their opinions. Can I start with you, Floris?
Sure. So thanks. It has been a great event. So we all need to learn more about AI and the macroeconomic and economic implications of it more broadly. So, we want to talk about the promise of AI, but let me start the biggest problem I see as I talk to the macroeconomists around me on a regular basis. So we had our economic outlook just launched 2 weeks ago. And also this is the same with the IMF and others, that we are projecting the lowest economic growth since the financial crisis. So that means that there's a need for productivity growth. Of course, in this room, we don't need to say this, but it's very obvious that the biggest promise of AI has to boil down to productivity growth. Now on this, of course, we have seen that AI has been improving very different cognitive tasks. And there has been a lot of work on the micro estimates of AI. So for example, it can increase the productivity by 14% in customer services, in consultancy, a little bit more, 20-30%. When it comes to legal services, maybe even 100%. However, when you talk about micro gains, these are still potentially relatively small portions of the economy. And more importantly, is that these micro gains, in order to understand their macroeconomic implications and aggregate up to total factor productivity, you need to take certain steps and make certain assumptions. So at the OECD, in order to maybe clarify or add to the confusion on the macroeconomic estimates of total factor productivity, which you know that they vary quite a bit. So it comes from 1.5% from McKinsey and Goldman Sachs to 0.1% over the next 10 years in the case of Acemoglu and some others. So our estimate, our contribution in that place is actually try to focus on the sectoral differences and to consider both AI exposure and as well as adoption across different sectors. And then not only consider the sectoral impact, but also the sectoral reallocation that AI could trigger. So in this one, there are three main impacts. One is the direct sectoral impact you get from AI exposure and AI adoption. The second one is that these sectoral impacts actually can feed to something bigger because of input-output linkages. So if your input provider increases their productivity, this feeds through your productivity in some way or another, at least through the decreased input prices. And then the third effect, which is usually not mentioned that much, is the boom-all effect, what we call, which is that the reallocation of different factors of production in the economy could lead to actually a decline in productivity. It is if they are very much focused in certain sectors. So what we observe is that our estimate, which we published the working paper a couple of months ago, is around 0.4 to 0.9 for United States. And we are refining and extending these estimates for the G7 countries. And in these estimates, one thing that to notice is that this range from 0.4 to 0.9, in the 0.9, we are talking about more of the incorporation of robotics, for example, and so what this could trigger. So for the European Union, and we look at in the context of G7 for Germany, France, and Italy, we see that there are also large differences across countries, but we are looking into around 0.0 to 1% for most of the European economies. Here, as I mentioned before, one of the critical factors is how widespread AI adoption is across different sectors, because sectors can really vary how beneficial AI for them, and also, of course, also the adoption. So when we look at that, there is actually, in terms of adoption, for example, there has been a lot of discussion. Adoption is still actually very small across many of the European economies, actually across all economies. So we are looking into, if you're asking the firms yes or no question, we are looking into 14% of AI adoption across firms in Europe and about 20% in the US. But if you go beyond yes or no question and you ask how much of AI you are using in your production process, which in some ways is the biggest drivers of productivity, right? We just don't want people to use ChatGPT for emails, but we want them to incorporate AI in their production process. The numbers are astonishing. For 2024, in European Union, the number is 3%. 3% of the firms incorporating AI in their production process. For the US, it's just 5%. So there is a long way to go in terms of AI adoption, but we are hopeful still additional 0.5 to 0.6% across Europe, I think is a good number, which we could all hope to achieve for the next 10 years. I stop here.
Thank you. Bertin, you have been thinking a lot about artificial intelligence for many years. What are your general thoughts?
Yeah, so you revealed to me during the breaks that we had yesterday and today that your favorite subject is economic history, and you revealed that also in your introduction, so I will oblige you in this respect and also start with a little piece of economic history and start where Jonathan started this morning with the Industrial Revolution. The Industrial Revolution, what did it do to humanity? It augmented our muscle power, basically, the steam engine and later electricity and all the machines that were built around this. All of a sudden, we were capable of doing things that were simply impossible before because we didn't have the power to do that. And so for me, the greatest promise of AI is it does not augment our muscle power, it augments our brain power, our cognitive capacity. All of a sudden, we have an instrument at our disposal that can do things that we couldn't dream of doing in hundreds of years if we brought all human cognitive capacity together. And so for me, this is the fantastic aspect of it, this cognition augmenting factor in AI. I was here yesterday also, and I listened to several studies mostly on the substitution effect, and I know economists dream about all these substitution effects. 6 years ago, I started working on the economics of AI, and together with a colleague at the time at the JRC, I wrote a paper on, will this time be different? And we concluded from the empirical evidence available at that time that there's no indication that this time will be different, meaning that substitution may be there will be some of that, but it's mostly the augmenting aspect that is going to play an important role. And so I think we should focus far more on this cognition augmenting aspect of AI. And we can do that. I think so far we focus too much, but it's natural, we are at the start of the AI revolution, especially the generative AI revolution, and we focus very much on these very large language models that have huge fixed cost to pre-train. Today we are at hundreds of millions of dollars to train a competitive large language model. But we forget that there is a lot of things that we can build on top of these models once they are there. They are a sort of infrastructure layer. And again, I was inspired by Jonathan's presentation this morning, where he made that distinction between the supply side of the technology and the demand side, the take-up, the use of that technology. And I see LLMs on the supply side, and you have to have them. You have to teach AI first how to talk, how to read numbers, how to do equations and coding. And so these are basic skills. But once you have these LLMs, you can build millions of applications on top of that. And we've seen that, for example, if you go to the OpenAI App Store, you find millions of applications built on top of ChatGPT. And that is where I think most of the productivity gains or to be realized in the next couple of years in the future. And so we shouldn't, in Europe, stare ourselves blind on these US big tech companies that have the hyperscale infrastructure, computing infrastructure, the data, and they can build these models. But once they are there, we can use them and we can build many applications on top of that. And I think that's where our productivity gains are going to be realized in the near future. We should also try to make it easier to build on this. Over the last 6 months or so, last 3 months in the AI world, we've seen a lot of evolution. We've moved away from emphasis on these large-scale LLMs towards second stage fine-tuning and reinforcement learning and distillation between models, and more emphasis on reasoning at the user stage. And that opens a vast number of opportunities and perspective, and we should focus much more on that, I think. I'll stop here for the time being.
Markus?
Thanks a lot. It's a pleasure to be here and for giving me some platform to talk about this AI topic. I know that Jesús, he likes to read books and he really, loves books. But we are subject to a big transformational change going on. In the future, I will not write books for humans and for Jesús, but I will write it for artificial intelligence agents. And you might write books very differently, but that's just one example where the world will change. We go through a huge transformation. And what I would like to talk about is a little bit, how can we design this transformation in a resilient way. Because typically when you think about it, there might be shocks to the economy and we want to bounce back. But here we actually have a positive transformation, so potentially positive, but it also might lead to this J-curve effect we have heard about. It might be temporarily go in the wrong direction. And the question is, how do we manage that? And if you think about it in the long run, we might actually, there's some risk we might become addicted to AI, as we are addicted to electricity. Just imagine if we were to take electricity away, how would we deal with that? Of course, removing the steam engine is probably fine at this point, but taking electricity away is a big problem. And so in the long run, I can see the addiction and the that it becomes systemic. That's essentially a big problem. And the same thing is true also for the smartphone. If we just take the smartphone away, it might change our economic situation very radically. But that's in the long run. But the transition is a complicated thing to manage. And the way I think about it is like a two-speed system. So on the one hand, they have a fast evolving innovation system where the private sector is pushing forward and is pushing new technology onto us. And the technology is always neutral in a sense. It has positive elements, and you want to foster the positive elements. And it has potentially dangerous elements as well. And we have to contain these dangerous elements. And of course, one way to contain these dangerous elements is through regulation. Then the question is, how fast will the regulatory environment move? So what's the speed of the regulatory environment? And more important, or equally important than regulation, are social norms. So in my view, our behavior is of course shaped very much through regulation and laws, but equally much through social norms. And how fast will the social norms evolve over time? And if the second system is too slow compared to the first system, it could be that it's not a J-curve effect, it's actually going down and derails the whole system. Okay? So we have to balance essentially the speed at which we innovate with the speed with which we regulate and adjust our social norms. And for this, we need conferences like this with AI skeptics as well to affect the social norms in general public debate in the whole society. I think that's very important in order to ensure that the system will stay stable. I like your analogy. Let me just come to your point, the analogy that the Industrial Revolution was all about machines replacing our muscles, and now we have AI replacing our brain power. And so I think this analogy is very nice. The question is a little bit, when we developed the scripture, Socrates was very worried that we won't be able to memorize things anymore. And so we found alternative ways to memorize things. But for the muscles, it was similar. We go to the gym now in order to keep our muscles. In the olden days, we're just working on the field. So we didn't have to go to the gym. Now we have to go to the gym. So one question for me is, what is our cognitive gym in the future? Will it be just playing chess with others, or what are the cognitive gyms we have in order to keep our brain power alive, or will our cognitive abilities decay with this? But that's another transition we have to manage. But there are a lot of interesting aspects we have to manage, and later probably can go further in AI regulation, and what we can also learn from financial regulation, what we can bring into AI regulation, because financial regulation, we have a lot of insights over the decades or centuries, and some of the elements we can just copy, or let's say not copy and paste, but copy and adjust for the AI regulation.
Thanks. I think that a perfect mental gym will be to take a class in economic history. But anyway, Fidelio, you are in the industry, you know the real world much better than I do. What are your thoughts?
See about that, but generally, the general feeling, coming back to your point, Mr. Brunnermeier, is that it feels like we have enough AI skeptics in Europe at the moment, it seems like that not enough is, at least in this ecosystem, is focused on the positive impacts of AI, and there's a ton of risks, as there were risks with any big shift. But coming back to the analogy with the steam engine and AI being a general purpose technology, right? AI can be a huge, huge equalizer throughout basically any field. So reducing technological divide, meaning that smaller teams can do more things. I mean, it's changing how we build software. how we use machines, and with the agents you talked about as well, you can dive into almost any vertical. So it's going to be difficult to not engage with AI in the future. And on a smaller scale, on a personal level, using AI unlocks vast amounts of value, at least from a entrepreneurial perspective, meaning that it empowers founders or employees to build amazing things and execute much larger projects with smaller teams. And I think that's an equalizer, meaning that not only these large companies will be able to build cool things, but everybody. And the second big question that was sent to us beforehand, I'm not sure if we're touching on right now, was the European focus, if developing AI still makes sense for Europe, and despite high costs and first mover advantage of these large companies. And I think that framing is not really correct, because, for example, when you see what happened with DeepSeek, it's still very possible to upset the balance of power. We don't know where this is. We're still at the forefront of this new technology, and which means that everybody should build AI. And also we need to build it in Europe, also from a dependency standpoint. And also because AI is not just a technology, it's also a cultural caring technology, like the CEO of NVIDIA stated recently, meaning that it's a digital intelligence that we build within. It's a new layer of infrastructure, meaning that like telecommunications and roads and electricity, or how Bertin said it earlier, it's a cognitive augmented steam engine practically, and it needs to be seen as an asset. Yeah, we need to invest in it. It's not just something that we should outsource, yeah, and Europe needs to build it themselves, because you also wouldn't want to outsource this intelligence to another supplier, because that makes it dependent, and yeah, so we should see it as an infrastructure investment in Europe, and if our governments do not build it themselves, then we will need to buy it from someone else, and that can lead to difficulties. And also, building a model is one thing, training a model is another thing, and I think we need to train these models ourselves. You can work with there's so much open source. Open source is amazing, and we need to build on top of that, and I think it needs to be done within Europe, for Europe, rather than buying it in from external.
Okay, thank you. So if you like, now I would like to switch to a little bit more concrete questions, and feel free to, address everyone else's answers so we can have a debate. Let me go back to Filiz again. You mentioned what I thought it was a really striking number. I think you mentioned that only 3% of European firms are incorporating artificial intelligence. That seems really a not very optimistic number. What do you think Europe needs to do to increase that 3% to 30%, 60%, 90%? What are your thoughts about it?
Now I'm going to turn that pessimistic number to an optimistic number by giving you another number. That actually in the last year, the increase was 60%. So, we started from a lower number, so now we are at 3% for the high processes. So again, this is not the overall AI adoption is around 14% of Europe. This 3% number is the companies that are adopting AI in their production processes. So that is the one that perhaps have a bit more impact on productivity. And again, just over the last year, in the context of last year, we see 60% increase in that number in Europe, and about 50% increase in the United States. So in that sense, there's a bit of a glimmer of hope there. So in our work, we are very systematic about how we look at this. So as I mentioned before, AI exposure, AI adoption. So what are the drivers of AI adoption, which we think there are mainly two, which is the first one is digital infrastructure. So when we look at the, for example, the internet users per population, or the data centers per population, we see that Germany is a bit closer to the US, but France and Italy are still lagging behind in that. The second potential element for adoption is, of course, people, the talent, the skills, especially for problem-solving skills. We see that when you look at the PIAC scores for Europe, they are much behind, maybe a bit less for Germany, but for France and Italy, the numbers actually have been going down. Another potential indicator could be the STEM graduates. We see the same thing, that the US is leading the way there. Germany a bit better, but France and Italy are lagging behind. So this is on the digital infrastructure and skill side, which are the main drivers of AI adoption. When you look at the AI exposure of each sector, AI capabilities, of course, it's not reasonable to expect that all AI models will deliver for all sectors with the same quality of models, or they can reliably deliver on the outcome. So they actually differ in terms of their performances when you look at different sectors. However, again, is it entirely exogenous to Europe? I believe the answer is no, because there are ways that you can have an impact on the AI models, whether they reflect your values, your sectoral specification, the biases that you don't want to have in AI models, etc. So these are almost endogenous factors that you can have an impact on. And perhaps on the question whether the Europe should develop their own AI models, Europe already has some frontier AI models that are running. We have Mistral in France. We have video AI from UK, from Germany, audio from France and Portugal. These are frontier runner models. There are 15 AI frontier models, and these are all, Europe is actually also in the race as of today. This is a very high-paced market, but our research shows that this is not lost in that sense. And so there's also a bit of hope to improve AI capabilities there. Now, of course, one of the biggest elements is the regulatory factors for AI adoption, and how much of a macroeconomic impact, economic impact of AI we can expect. There, our view is that regulatory environments needs to strike a balance between safety, competitiveness, and innovation. Of course, you may be willing to introduce the AI models only once they are very safe, but there will be lots of trial and error. You are going to lose time in a very highly competitive market, and at the same time, you are going to make this incredibly difficult to compete and to enter the market for the new entrants. So there's a bit of a trade-off there. For the competition, of course, competition is, we see it always good. Low entry, no barriers, no bottlenecks is good for the companies. However, it seems to be there's a bit of a trade-off with the innovation. If the market is highly competitive, it was made also in the Bruegel piece very clearly that if the market is very competitive and nobody is making enough money, then what is the result for innovation? So there's a bit of, there is almost like a bit of an impossible trinity: safety, competition, and innovation, if you wish. And from the regulatory side, I think one clear, very important element is the clarity of regulation. We should not be introducing unduly uncertainty to an environment, to the market that's just developing. So at least knowing what the regulation is and the ingredients helps a lot. So in that sense, we see a very positive development. We see the AI regulatory developments in Europe very positive to resolve this.
Bertin, so you work at Bruegel. You are in Brussels, you are close to the Commission, and yet, if I go to the webpage of Bruegel, you have written recently quite a few posts, somewhat critical of some of the European regulations. So what do you think Europe needs to do about this? And do you think that people in Brussels are aware of those steps?
Yeah. There's so much to say about this. I basically agree with you that you need to have the infrastructure, and there are barriers there, and there are regulatory barriers. I see the European Commission trying to set up these AI factories initiative and throwing billions of euros of taxpayer money and trying to create that infrastructure. I don't see the market failure and why there would have to be public sector or government intervention and investment in infrastructure. This is a commercially viable thing, and the private sector should do that. There can be some supportive measures from the public sector, but by and large, this is an investment that needs to be financed by the private sector. In Europe, we don't have hyperscale infrastructures, and that is simply because we missed the boat on these big tech platforms to a large extent. And they created that infrastructure because they needed that for their platforms, and then later on put an additional layer of NVIDIA GPUs in those platforms, in those infrastructures, and that allowed them to run these models. But as I said before, pre-training such a model today can cost over $100 million, and you need to have a very big company and a huge cash flow in order to afford that investment and to afford the investment in infrastructure. We don't have that type of huge global business model companies in Europe, not to that extent. But we don't need that. I think we should invest in AI infrastructure, but we can start with 5 or 10 or 20,000 GPUs, and we can do a lot of fine-tuning and a lot of inference with that, and that should be enough to build on top of these foundation models. Now, on the regulatory side, Europe wants to be the front runner with regulation, and traditionally we take a very precautionary stance rather than a pro-innovation stance in Europe. And we see that also in the AI Act. And we want to build in all kinds of regulations to have safe AI, to have ethically responsible AI, and so on. And as a model developer, you can build a model with the necessary guardrails in it that make it correspond to those standards. However, it's easy for computer scientists to take away these guardrails or to work around that. And so that's not a waterproof or method or approach to make models safe. AI models are dual-use technology. You can use it for warfare, and it is today being used for warfare, these same models, and for health sector or educational purposes. You cannot avoid that. And I think that is something that we will have to live with. We see regulation creating huge compliance costs in Europe. It's not just corresponding, trying to comply with these ethical guidelines and safety guidelines. A model like ChatGPT can probably write its own compliance report today. You don't need humans for that anymore. But I see a huge compliance cost on the model deployer side. A couple of months ago, I was at a meeting organized by one of these big consultancy companies in Europe, and they explained what they are doing in the banking sector to make banks that apply AI models, what they have to do in order to satisfy these ethical rules and safety rules. And when you look at the flow chart, you are overwhelmed. And the banks admit it costs them tens of millions of euros to comply with this. That's a huge compliance cost, even for a big bank. I wonder, what is the value added that it gives? It's a huge rent-seeking opportunity for consulting companies, that's for sure. Whether it actually brings something or whether it pushes banks much deeper into the trough of the J-curve before they can climb out of it again, I think that's also a real factor that we should consider. And why is this necessary? I see now the code of the code of practice for the implementation of the AI Act that's currently under discussion in Brussels. I thought that could have been an opportunity to round off some of the sharper edges of the AI Act. And there is a big political battle in Brussels going on between people who want to round off the edges and people who want to make the edges even sharper. I see all kinds of things appearing in that code of practice that's not even in the AI Act itself. So, and I start wondering what the hell is going on there. I work a lot on copyright, and I see that it's becoming a big issue. I see that a lot of the most advanced AI foundation models are being withheld already over the last 6 to 8 months from the European market. So we are already losing in productivity gains because of our regulation. Now, most of that is due to the GDPR, to privacy regulation at the moment. But when the AI Act kicks in September, becomes effective, I can see copyright fulfilling that same, being in that same position, and companies being forced to hold back some of their models and some of the services that they build around those models. So this is becoming an obstacle in Europe, and I wonder why we make it so complicated. So yeah, we need regulatory simplification to be much more pro-innovation in Europe.
Markus, you and I share one common factor, which is we are Europeans living in the US. So do you think there is something we should learn from the US in terms of artificial intelligence policy, things we should not learn from them? Where do we draw the line?
I think there are surely many things we can learn from each other. But so it's not clear that Europe should simply copy the United States. So what Europe does not have is the same capital market structure. One reason why the US can have these foundation models, because they can actually fund this huge $100 million, and then this $100 million is outdated 3 months later. You have to spend another $100 million. And Europe can essentially not go the same way. So the way I see it in the United States is a little bit, there's a bubble forming, an AI bubble forming. You can raise a lot of funds, you can fund that. It might be socially beneficial ultimately. I'm not sure whether it's beneficial for all of these investors exposed. Like when we had the internet bubble, it was also the case that every firm thought, I will be the new monopolist. The winner takes it all. And different investors have a different idea who the winner will be and takes all the benefits out of that. And at the end, there will be only one monopolist potentially, and all the others will be losers. And we have seen this show playing again and again. And I think that might be a danger here too. And it's actually good then. It might be good from a social perspective to establish this technology. Whether it's good for the investors is probably is an open question. And then the question is, can Europe do this? Probably not. So hence, and I'm following Bertin's suggestion here that it might be better to follow the DeepSeek approach. Okay? So you say, okay, there is something, we build on that. We don't have to have all the foundations on ourselves. There might be a second mover advantage. It's a little bit like what Apple is doing. And Apple is never, the first mover in something. They're always the second mover, and they refine it and make it better and make it much more user-friendly. And perhaps that's the way for Europe to go, to find the applications and that. And so the second point I would like to make is that one great opportunity is that AI will actually lower the cost for many, many other things. So it's actually a reduction of fixed cost and entry cost for many, many areas. Let me just give you one example. To really have a high-profile movie these days, it costs you hundreds of millions. Now, it's very hard to generate this, given all the different languages across Europe. But with AI, offering a new movie might be so much cheaper. So the whole movie industry might look very, very different in 5 or 10 years. And it might open up actually for Europeans to become the leading companies besides Hollywood to produce movies. And that's just one example. But there are many areas where the industry will change radically because the entry costs are much lower. And that's, I think, what one can focus on. Let me also say perhaps a few words where others see other potentials. Bertin mentioned that we have a lot of bureaucracy and red tape and all that. AI might be helpful to overcome the red tape because memos can be written with AI and can be read with AI. I have this, my famous, I love this picture where I said somebody sends an email and said, okay, I only put 3 bullet points in, and then it made this long 3-page email. You send it to somebody, and the other person says, I'm so happy that I have AI. I can summarize this long 3-page email into 3 bullet points. So there will be a lot of these activities going on. Of course, it will be stored somewhere, this long memo. But there will be bureaucracy probably created by AI, but it also will help us to comply to many things. And perhaps we can overcome some of this, what holds Europe back, this bureaucracy as well. yeah, let me leave it at this stage.
Okay, Fidelio, so I went to the webpage of your company, Medimir, and you have this great slogan. You should congratulate your marketing people.
Okay.
Medical expertise meets German engineering. So what do you think a company like yours needs in terms of a regulatory environment or government policies in general to fulfill this promise that you have in your webpage of really becoming the company that democratizes medical care, healthcare, etc. And how can these ideas be applied to other businesses in general?
I mean, lots is always criticized in Europe, but we also already got a lot. I want to maybe try to focus on some positives as well. We got around 850,000 from grants, public non-dilutive capital, and that is great. But from a funding perspective, EIT is something I would love to talk about, for example, right? The large fund that funds early stage startups within the EU. And for some reason, we always fail at getting through to them because they fund, let's say, 80-90% hardware companies. So, and when you get a reply from that institution, it always says that it's not innovative enough because by definition in software, everything is an iteration of a previous system. And from their perspective, that does not count as innovative. So from their perspective, all these amazing AI companies in the States would not be innovative, And then you have to ask yourself the question, are these funds being allocated properly? Because hardware products are extremely capital intensive, obviously. And it might make a huge difference to a small company such as ours to get some more non-dilutive capital with, let's say, a fifth of what a hardware company would get and make a huge impact. And I think that this disconnect is one of the reasons why all these huge success cases from the States, most of them are software companies that would not have been funded by EIT, for example. So I think focusing on innovation on such a narrow scale is not ideal. So maybe some more support, but then obviously what we really need is a framework that we can count on. So I mean, there's a lot of insecurity in the field right now with the new AI Act. And the high regulatory environment. We are a CE certified medical product, which was immensely difficult to achieve. And we had to fail 3 years in a row to get it right. And we have to do it over and over again. And we are sort of regulating. Right now, it seems like that the EU is regulating itself out of relevance almost, because it's making it so difficult for companies to achieve what they want to achieve, and the outcome is that it takes much longer to go to market. Compliance is a much higher cost than in the other areas, and the legal uncertainty is a huge negative impact. And it doesn't really. It's not a recipe for innovation. It's a recipe for relocation, practically, and it's something that we've thought about, unfortunately, because it's so much easier to build in other geographies, and that's sort of the divide. And we would love to remain in Europe, stay in Europe, build in Europe, but I think the people who are coming up with these regulations are so far away from the actual what is actually happening that I think there needs to be a better discourse. And the last point I'd like to make, and I think my time's over, is, for example, when you get, in Europe, when you get a negative feedback for one of these grants, then that's that. There's no way of contacting anybody. And just possibly having one iterative call with one of these institutions, because oftentimes you know that this person has nothing to do with medical products, has nothing to do with your field. Maybe just one call, 1 hour of that person's time would lead to a different outcome. And I think it just needs to be rethought in general.
Okay, thank you. So I was actually going to ask later about the European Union Artificial Intelligence Act, but since both Bertin and Fidelio mentioned to it. Let me jump to that. Filiz, you have any particular thoughts about the Act? Do you think it strikes the right balance between managing risk and incentivizing innovation? If you had the possibility of amending it in some way, what will be your proposals?
Thanks. So our view is overall very positive. I think the risk-based approach that they adopt, that this is very similar to what we do in macroprudential policy or banking supervision. So, from an economist point of view, I think it makes a lot of sense, and also that to use the sandboxes, taking a broader oversight approach. I think we see these all very positive. As I mentioned before, we are still observing a lot of competition, maybe at the expense of innovation. So if there is one area that I would like to pay more attention to, is that, in order to observe the economic implication positive economic implication of AI, we need to be more open to maybe a bit more on the light touch approach, a bit more than usual, in order to benefit it. Because one of the, of course, we do regulation to avoid risks, but there's also a big risk that Europe may miss this opportunity of AI. And this is also, we should take it seriously. So at the end of the day, it's a bit of a balancing act. We think that it's very close to striking the right balance, but maybe some more thinking could be done there.
Thank you. Bertin, you already mentioned some of these ideas before, but if you were going to, if you have a magic wand and you could change a few articles of the Act, where will you apply your wand?
Yeah, I would definitely like to lower the compliance costs with respect to access to data, access to copyrighted data for model training and for model use. Once we get into AI assistants, for example, these assistants will want to go out on the web and collect the data in order to reply to our questions. And there again, we'll get stuck with the current rules that are in the AI Act and in the Copyright Directive. What we generally see, going back to economic history, Jesús, is that when there is a fundamental technological change, especially in communication technology, and I think AI is such a fundamental change, institutions have to adapt to that new setting. We've seen that when the printing presses came out, it led to religious wars in Europe. We've seen that with newspapers coming out when paper and presses got cheap. We saw that with telephone and so on. We see that now with AI. We cannot live with pre-AI institutions in the AI age. We have to adapt that. And that's true for a lot of these regulations that we have in Europe. It's true also for competition policy, I think. Markus mentioned, said, well, indeed in the platform era, there was this perception that the first mover wins, first mover takes all, takes the whole market, and the rest is left with peanuts. And that was in platforms because we had strong network effects in platforms, and that made people flock to one and the same platform because the more people that were on the platform, the better the service. And so you go to that platform. We don't have those network effects in AI models. At least we don't observe them yet. They may come when AI ecosystems start to coalesce around models and more services are built around that. We'll have to watch out carefully there. But for the time being, we don't have them. On the contrary, I think we have strong competition between AI models. There are hundreds of large language models. And actually, it's a loss-making industry, as was said before at the moment. Most of these big companies are selling their services at marginal cost or even below marginal cost. So one advice for the EU competition commissioner for me would be if Trump becomes too pushy, you can go back to him and have an anti-dumping case for AI models against the US. So, but okay, that's a far-fetched idea. So yeah, we have to be careful in how we build up our European AI industries and make it easier to do that and make it easier for entrepreneurs to get into that sector.
Very good. Markus, you have Any view on this?
No, I just want to say, I think we focus very much when we regulate AI on safety, and which is very important. But we should also keep the industrial organization structure in mind. So what industrial organization structure do we want to have? Do we want to foster competition? Do you want different layers? And how would the industry evolve? Of course, it's very hard to predict how the industry will evolve, but when you design the AI Act, I think it's very important to keep this in mind. I think one aspect which was not mentioned much so far is the military aspect to it, which I think is becoming more prominent. And the question now is to what extent, and this you also indicated the demand uncertainty. When you have new innovation, the biggest problem is that you don't know where will there be demand. And having a big DARPA arrangement or something like that can actually secure reduce the demand uncertainty. And so this is probably more for the German audience here, that if there's a huge scale up in military expenditures, which will happen, perhaps you should invest it less in tanks, but more in artificial intelligence and drones and other things, which can then spill over. And so this DARPA phenomenon in the United States, where the internet was from DARPA, so it was all spilling over. Perhaps there's some design. In general, I'm very skeptical that the government should intervene too much. It can take a coordinating role, in particular if there are many small or medium-sized enterprises involved applying AI. There might be some coordinating role or to share some data role and building some platforms, but probably some industry organizations can do a better job than the government to do it. But if you want to, the problem is once the government stands there, there's a big pot of money. The whole industry is just looking at this pot of money, how to get this pot of money, rather than what's the best thing to do. I think that's one thing. The only, exception in my view would be the military thing. And then whenever you invest in military, you should keep in mind that it's not only the military objective, it's also the spillovers to other things. And you might not be able to predict well the spillovers, but you might have some spillovers in other areas as well.
Okay, thank you. Fidelio, you and the AI Act.
Well, I must say my co-founder is the person taking care of these topics, so I'm not there. But we've
you can channel.
Yeah, no, but we've spoken about it, and also what Bertin touched on. It's a huge regulatory. It demands regulatory compliance from startup or early stage enterprises or small startups that do not even have product market fit yet. So you're talking about a pre-revenue situation. You don't know your clients yet. You don't know if your business is viable. So which means that you probably also lack funding, odds are. So any cent, any dime you can save is money well spent somewhere else. And when you have to pay tens of thousands of euros to set up a CE certification or something like that, early on, it can literally mean that the company will not have a future. So I think the subject of sandboxes, regulatory environments where companies can test things are great. One of the reasons we're not gone yet, left Europe yet, is an initiative which is part of the EU AI Act. So we're part of an initiative called TEF Health, and it's a large conglomerate, and they're going to help us get our new AI version certified, and we'll see how that goes. But in general, having sandboxes set up in our medical area, that would mean a digital hospital where we can sort of test our software without causing lives being lost. That would be an amazing setup, and I think that shouldn't be too difficult to achieve. So there's so many things that can be done without all the great risks, and I think it just means thinking outside the box a tiny bit, and the regulators actually coming together with the young startups, or I think that'd be a great idea.
So before we move to our last block, I'm going to have a follow-up question. This is not to any of the four of you in concrete, so if you don't have any thoughts on it, but whoever thinks something about this, I would like to hear it. So one foundational idea of the European Union is the principle of subsidiarity, that you want to regulate things at the lowest possible level that makes sense. Have you thought about this? How many of these things that we are regulating now in Brussels about artificial intelligence, should we regulate it at the European level? Should we regulate it at the national level? And should we regulate it at the regional level? Since you may have opinions on that.
Just to give you one example of how the subsidiarity principle can go awfully wrong in the case of AI, is with respect to GDPR, to privacy regulation. In the EU, we have one GDPR regulation, but the implementation it's the member states, 27 member states, who have to implement it. And in Germany, each of the Länder has its own implementation agency. Plus, you have the European Data Protection Supervisor. Altogether in Europe, you have more than 40 instances or institutions that regulate the GDPR. One of the reasons why at the moment, over the last 8 months in Europe, we don't get the most advanced AI models produced by Apple, Microsoft, Meta, and so on, is that these models, because of scaling laws, are now increasingly making use of social media personal data. And while in the US this is not a problem, in the EU we don't know whether it's a problem, because we have clauses in the GDPR that say, well, if it's legitimate, you can use those personal data for training your models. But what does legitimate mean? And these 40+ authorities differ in views on what is legitimate in Europe. Result, regulatory uncertainty. And nobody wants to run the risk of having a 10% of global turnover fine when they release these models in Europe. So we don't get those models. That's because our regulatory, the subsidiarity principle has gone down a level too low. I think in this case we should have one central authority in Europe that decides what is admissible and not.
Okay, very good. So let's jump to the last block that I wanted to ask. What do you consider are the most significant, or is the most significant risk posed by artificial intelligence? And this can be economic, social, budgetary, you name it. And what do you think we can do to address it without stifling innovation? Filiz?
Yeah, thanks. I think the biggest risks probably in the short term are outside of economics. We are thinking of cyber risks, scams, misinformation. There, going back to regulation, it would be a mistake to do a blanket AI pressing just to avoid these to happen. I think the regulation should focus on these activities themselves, downstream, rather than trying to steer the development of AI itself. And at the end of the day, AI is just a tool that we are using, right? So the domain of the regulation could be very specific to the activities that it would like to regulate. So one aspect of the risk that I see, which is perhaps a bit less emphasized before, is that, you know, it's also, we discussed today whether it is replacing labor, whether it's a substitute. One thing is that in the previous episodes of automation, we see a huge increase in automation during crisis times. This happened during the global financial crisis. This happened very recently during the COVID times. Now, one risk could be that when the next crisis comes and the downturn, there will be an incredibly rapid substitution of labor, and this will bring all sorts of social and economic issues. So I think governments will need to prepare for it now to really put a lot of emphasis on retraining, skilling of labor and education. I mean, of course, this could happen also with the robotics. And of course, finally, one very potential risk is that we said the competition and the AI development for now looks quite dynamic. However, there are risks there if the gatekeepers, Google and others, or the cloud services could become unreliable for different reasons, geopolitical, rival, or competitive reasons. So there's there could be competition issues there. There could also be competition issues downstream in the adoption of firms. And again, the winner takes all dynamic stars. We saw this happening in the digital markets. So I think I would see competition still as a big risk. I stop here.
Thank you. Bertin, what keeps you up awake at night? The paperclip problem?
No, I agree that cybersecurity is a real threat, and with AI will only get worse. And it will get even much worse with quantum computing, but fortunately we are not there yet. I think in the very near future we will need personal AI assistants to protect us against all kinds of scams that we simply are unable to detect with our human cognitive skills. But AI can help again there. So, as I said before, it's a dual-use technology. It can be used for bad, and it's an arms race on both sides. And we will need AI to protect ourselves. So I see it also as an opportunity against these risks.
Yeah. So just one small thing. On April the 10th, next week, I'm actually running a conference on quantum computing in economics at Penn. We have made a lot of progress on quantum computing.
Sure.
You know, don't think this is going to be in 10 years. Much closer than you imagine. Markus, what are your worries?
So I agree that the existential risk is probably a little bit overplayed, the paperclip problem. But there's always the argument whenever we do something, we need a kill switch. You can just switch everything off. So as long as you can pull the plug, it's fine. But I would caution about that in a sense that we will become in the future AI addicted or AI addicts. Because we will be so used to using these devices that we can actually not get rid of them so easily. It's, as I said earlier, it's a little bit like electricity. We are addicted to electricity. We cannot say, okay, if something goes wrong with electricity, we just switch it off. We have a kill switch, it's fine. I think that's a big thing. And because it will be so interwoven with the economy. And the private enterprises probably have not enough incentives to build enough resilience in the system that we can actually go back a step or two without getting in difficulties. The other thing is, what I also agree, and I come back to a different J-curve effect, is deep fakes and cyber thing. So we are used to that, you know, when something happens, some crime or something, we can just with the mobile phone take a video, and there won't be so much crime anymore, no? Because everybody can just record everything and give it to the police. But if all the videos can be fake too, then the crime rate might go up. No, there might be a lot of difficulties because we don't know, is this a fake video, is it not a fake video? So let me just make a proposition here. So it could be that the crime rate is going up because I can now commit a crime saying, okay, somebody recorded this was just a fake. So that's in a sense we will go downhill before we really find ways to come back up again. And we might go down even so far to hit the tipping point, and then the resilience is not given anymore. So that's where the resilience point comes in. Now, as Bertin said, the best way to fight AI and these deep fakes created by AI is some other AI. There's only other more sophisticated AI to solve that. Now, you could say that's the way out. But what happens if Europe does not have the frontier AI, but US and China has it? And they create some deep fakes with their advanced models, and we have the second tier models, or a little bit lagging behind. Then Europe will have particular risk of not being subject to AI manipulation in a sense. So that's another reason where we have to be more careful about that. So in a sense, again, there is this resilience, which I'm probably obsessed with, element to that, so that to design it in a way that you say there might be temporary setbacks, but we can manage it and we can bounce back. So I'm not saying you should not take any risk. It is actually important in this environment, when the world is changing, to go into it and take the risks, but also be aware you should take the risks which lead potentially with some bounce back. You can readjust, and then you have to have the tools to readjust as well.
Very good. Fidelio, what are your anxieties about the future?
Well, the main anxiety is focusing too much on the risks, to be honest, because that is risky because it inhibits progress. And as we saw during COVID, for example, we are not in a tiny bubble. So at the same point you made, these other geographies, they're going to continue what they do. And you have to be an active part in this ecosystem. You have to understand the infrastructure. You have to understand the tech. By trying to build it yourself, and it's gonna spill over anyway. So the AI revolution, or however you want to call it, is definitely happening, and we can either decide as a geography, as Europe, to be a part of that and to be at least at the wheel, at least with a small finger, or who knows, or have it happen to us. You know, that's how it's going to be. You can only fight these things with AI probably in the future. So at least from a security standpoint, the others are going to do it. So we have to find our way of doing it. Yeah.
Okay, excellent. So it's 5:10, and we have now some time for some questions from the audience. So we follow the same standard that in previous panels. Uthman.
Thanks a lot. So we've been talking about what hinders AI from being developed in Europe a lot, right? And the main two answers here are regulation, bureaucracy, and so on, and financing, right? And we've talked a lot about the regulation, what's good, what's bad about what we're doing, what we changed. What about the financing? Why is the financing not there? There was a mention of we don't have these huge companies that kind of invested in this hardware and other things and that have those kinds of means. We had a brief discussion about maybe the public sector shouldn't be doing this, maybe so. But what is it that's not working here? Why can a European startup not go out there and get the $10 million it needs? When in the US, we see that, and we mentioned that AI right now is an industry that's losing money, right? In the US, people are just burning money, right, in order to build these things. So many things, right? I mean, Amazon didn't start making profits until like 5 years ago, right?
Yeah.
And that's been around for a while. Yeah. So what is it that is not working here, and what is it that we need to do in order to change that? Thank you.
Markus, macrofinance guy, and then Filiz.
So essentially, the capital market structure is very different in Europe compared to the United States. One classic example, so there's actually quite some VC funding going on in Europe. So you can actually start up a company easily. Of course, the VC ecosystem is much broader and deeper in the United States compared to Europe, but there is a lot of startups going on. The big challenge is the scale up. Once you have a company, to make it a big company and scale it up. And a lot of the scale effects are really important in AI as well. So to raise millions of, or hundreds of millions or billions of dollars, I think that's the more challenging thing. And that's, of course, we come to the capital markets union, all of these elements, and we also come to how we structure our retirement system. So this is all connected. So in a sense that in the United States, everybody is investing in their retirement on their own, and they're investing in stocks, and they invest, in all this indirectly through the startup and in private equity funds and so forth. And this is not there in Europe. And this also would require, so I can see it's actually very complicated now to switch the pay-as-you-go system, retirement system, to a system which is more capital markets oriented. So that's very difficult. But that's, an advantage the United States have. But if you look at, one successful, enormously successful startup in Germany, BioNTech, in the life sciences, they had got the startup funding from people in Tegernsee and so forth. They got started, but when they really wanted to scale up, they had to go to NASDAQ to go that. So if the capital markets stay open, we don't know whether they will stay open. There's always a way you can still get them scaling up. You can go to the United States, and often it is the case, you have a startup here, you have Skype, I call it the Skype effect, and then it's bought up in the United States and then scale up in the United States. So that's a big handicap Europe has in this regard. And so I don't see that you can change the retirement system right away, but it all feeds into that. What you probably can change, you can say, okay, if there are some insurance companies that can only invest X% in stocks, or they cannot invest in venture funds so much or something like that, that you change the regulation and allow them to take more risk. Because typically when we look at this, we always look at this from a micropotential perspective. So how risky is this for the insurance company? We never say, oh, what are the macrofinance implications for the whole macroeconomy? If they can invest, and they might create an ecosystem and might create some new scale-up opportunities, which actually helps the growth rate of the whole economy. And so we have to take these growth effects also into account when we do some macropotential regulation or bigger form of regulation. But now I got too much into ECB territory.
Filiz?
Yeah, I fully agree. Just to add a couple of things. Of course, we are all aware the lack of a venture capital system in Europe, and that's a big problem. Bank-based lending lends itself monthly payments, which is really go against the culture of entrepreneurials. Even, I cannot get I have a credit card in France that I have to pay the next month. So for all practical purposes, it's not a credit card, it's a debit card, but it's just postponed a month later. Of course, there are many issues about that. Maybe it's, again, too much regulation in the banking system. It could be that the risks are so low. So we reached a stability of a dead body at this point that nobody's lending and nobody's borrowing. So, maybe there's something to be learned there. The other thing is that it's also a bit cultural in the United States. I lived there for a long time. That going bankrupt is such a normal thing of way of life. You go bankrupt today, tomorrow you are fine. You smile. In Europe, I don't think we have that type of culture. And there also, of course, the insolvency regimes. There have been lots of improvements in Europe, but again, these are we just need to normalize a bit going bankruptcy. I think that could be useful. From a competition point of view, we see really a lack of horizontal and vertical integration. So, of course, that seems good from a competition point of view, that countries are not colliding. But at some point, as Markus mentioned, it really limits the pooling of the funds, and the size problems comes in. So, maybe also that, again, linking to the competition, maybe more horizontal and vertical integration at some level could be helpful for bringing more life to innovation and investment.
Bertin, you wanted to add something?
Yeah, if I may add a slightly dissenting voice to this. Is it really capital markets union or capital markets broadening and deepening that's stopping us in the AI sector? When we go and look at OpenAI, for example, in January they announced their Stargate project and mobilizing $100 billion. Where does that money come from? It comes from the Abu Dhabi Sovereign Wealth Fund. It comes from a Japanese company, SoftBank. It's not mobilized neither on the European nor on the US capital market. And they are able to do that, and they had to do that because going to the capital markets would have been very difficult for OpenAI, even though its worth was at that time worth 120 billion or so, now even 300 billion, because this is an extremely risky project. OpenAI has annual revenue of about $5 billion. You cannot pay off a loan or an investment of $100 billion with $5 billion revenue, especially if all those 5 billion are not even enough to meet your recurrent costs at the moment. So, and OpenAI so far was depending on financing from Microsoft, and they had this collaboration agreement. Stargate for me is the announcement of a divorce between the two. OpenAI wants to go its own way and has to go its own way. It wants to become the next Microsoft, but it's a very risky bet to do that. And so you have to have private financing for that.
Good.
One small point. Lots of really, really good points. Just to one tiny little extra add-on is that a lot of VCs simply do not invest in Europe. It's like they have their secondary funding in the back, and they've got a checklist, and you've got to go through it. And if you don't meet every single checklist, even if they love your product or what you do, they cannot invest. And also in that sense, the regulatory environment does play a huge role. I mean, these VCs, they're like, okay, we don't really understand how European regulation works, so we're just not going to do it. If we do it, you're going to have to set up your Delaware C Corp, possibly do that Delaware flip scenario where you actually get your headquarters into the States, and then that's like the minimum criteria to get the funding of these large VC funds. And then the second small point is that the risk profile is simply different. I don't want to condone them in any way, but I've talked to tons of European VCs, and you have to hit a certain sweet spot with them that is simply difficult to achieve. Dream big, but don't dream too big, and do this and do that. And also from a valuation standpoint, you can achieve so much higher valuations from these American VCs because they also want to believe in the dream and push you forward and get an even more grandiose valuation. And I think it's also what you said, a huge mindset difference. And then the last tiny point is that if you talk to family offices in Europe, also mindset thing is that they are very, they do not want to invest in early stage startups. So there's tons of private money, but it's not, just doesn't get allocated to early stage.
Yeah. As someone who teaches Wharton MBAs, I can testify a lot of them have grandiose dreams.
Yeah.
More questions from the audience? Yes. Can please remember to introduce yourself if you don't mind.
Winkler from the ECB. So as economist and a citizen, the big elephant in the room that keeps me awake even during the day is the elephant who will speak in the Rose Garden pretty soon. And of course that elephant is backed by 7 big CEOs and big tech. So my question is antitrust policy. Again, historical perspective, Industrial Revolution, Teddy Roosevelt, Vanderbilt, JP Morgan, all the big monopolists in the late 1900s and early 20th century. What is our thinking, our approach to antitrust policy with that combination of financial power, technological power, and as we now know, also political power, both as in the economy, for market economy. And we do know, I mean, there was a point Markus made, I mean, in the US also, all the startups in the end are bought up by the big players, or most of them. So competition, innovation, that kind of equation does not always, not in the long run, will not hold either, even in the US, I think. So as an economist, competition, safeguarding, antitrust, and then as a citizen in terms of the economic and political power. The kill switch will be pulled maybe this afternoon on the very interwoven trading system of the world. That's global, it's 100 years of integration could be unwound. And if someone pulls the digital kill, what did you call it? Kill switch. We are not in a good position on any side of the Atlantic, I would say. So, sorry, but that's a food for thought. But I really antitrust. I have missed that too much in this conference.
Okay. You want to go first again?
Yeah, I can say a few words on antitrust. So I'm not an expert on antitrust, let's put it this way. But there's 2 philosophies. One philosophy is you want to promote current competition, or you say, okay, in this world where there's a lot of upfront investments, I allow some temporary monopolies, but I also foster disruptions. So it's more a dynamic way of looking at competition rather than a static way. At the moment, I need 5 companies competing with each other in order to have more consumer surplus. It's more, I allow monopolies, and I just essentially, through disruption, I foster disruption. And then the question is, to what extent will new companies push out old companies? And if you look at the age distribution of US firms versus European firms or Japanese firms, of course, in the US you see way more turnover of firms. Of course, there is this whole concept of killer acquisitions, where you just acquire a small firm in order to make sure that this will not be a new competitor. And so we will see whether OpenAI at the end will then push out Microsoft or not. I don't know what this outcome will be, but these are just, I want to throw in this two perspectives. And there's probably some rethinking has to be done. There's a lot of academic work has to be done to rethink this antitrust philosophy. I think we probably have to move much more to this dynamic setting where you allow for some time for new technologies to come up and then also promote the disruptions, essentially.
Thank you.
Okay. Some other question? Oscar.
Thank you, Oscar Arce, ECB. So, listening to the five of you, I mean, there seems to be two important bottlenecks here in Europe, especially when comparing to the US. One is regulation, and the other is lack of funding, appropriate vehicles and institutions for funding this kind of investment projects. So imagine we are able to solve the first bottleneck with regulation. In Brussels, we do well, blah, 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 and we solve this bottleneck. Still, we are left with a situation in which we don't have the appropriate financial system to deal with this industry. So should we, my question here for Markus, but also for Fidelio and the others is, should we should we push for the Capital Market Union project to solve this second bottleneck? Or should we try, given the urgency, given that we don't want to miss the train, as Jesus said, should we be a little bit more brave on this and try some more drastic solutions? Maybe, I don't know, this is my question to you, with the participation of the public sector in this thing, because otherwise, I mean, we may lose this train. I mean, if we have to rely on a financial system which does not exist as of today to finance the whole thing, the chances that we lose this train, in my view, are quite high. So what do you think about this?
Okay. Briefly, because we only have 5 minutes to wrap up, and I believe in rules, not discretion.
I'm more skeptical that the public sector can actually do it. I think the public sector can do some coordination in this sense. You know, there's this saying, I think Martin Wolf wrote it, that, you know, when you put up subsidies, it's not that the government will find the productive new firms. It will be the firms will find the government, and these are not the most productive ones. I just, from recent experience in Germany, you know, we promised essentially money to Intel. It didn't work out. Then there was a battery factory. So it's all a lot of investment. It's not going then ultimately somewhere to really create something. So I'm a little bit skeptical. I think I would let the private sector go ahead, but the government should have a fostering element. And it can, to some extent, take some demand uncertainty out, reduce uncertainty. I think de-risking the thing would be the primary focus. Otherwise, it's hard to keep up with it.
I would not picture the situation that dramatic. I think everything, all the AI application layers on top of foundation models and second stage reinforcement learning and all the longer reasoning requires much smaller infrastructure, with a couple of thousand GPUs from NVIDIA. And we have the money in Europe to do that. And there are already private companies in Europe doing that. And so we can do that. If we want to go for the frontier foundation models, that's a different story. You need tens of billions of euros in infrastructure investment. You have to write it off in 1 or 2 years, and you have to do it again and again and again if you want to stay on top. And the reason why big tech companies can do this is because they have these foundation models and they can plug them straight into an existing global business model where it earns a rate of return. We don't have these global business models in any European company, not big enough to earn a rate of return on a $100 billion investment or €100 billion investment. So we are forced to stay a little bit below the frontier, but I think we can prosper below that frontier. And once we work our way out of that J-curve in a couple of years, maybe then we can aim for that frontier. But it would be too ambitious to do that now.
Okay, very good. So we are pretty much running out of time. Circling back to the steam engine, one day I was feeling provocative. I wrote that the steam engine was invented in 2025. It will never be approved because it was developed by British monopolists. They're not member of the European Union anymore. It pollutes and, you know, emits a lot of CO2, and early steam engines exploded with a very high probability. And so, you know, it was the trifecta of reasons why no steam engines in Europe. But anyway, thanks a lot to all the members in the panel, and thanks in particular for having been very brief and yet informative in all your answers. No, we need to stay here while...
Okay, very good. So time to say goodbye, and especially to say thank you to all the attendants, participants, the splendid panelists, and the organizers of this conference. Thank you very much. So I will not try to summarize, of course, the discussions, but let me try to extract some of what I think are probably the main takeaways of our discussions over the last couple of days. So we have explored artificial intelligence, multiple applications across a host of economic processes and what we can expect from them in the future. Professor McElhern yesterday emphasized that we are in a new era of technological advancement when progress is happening already at a very fast pace. While AI adoption remains very uneven across firms, sectors, and geographies, there is optimism for a productivity J-curve, as we just listened in the last intervention, promising an acceleration in productivity growth over the medium term. Professor Haskell's historical perspective, comparing the introduction of AI with the past technological revolutions, such as the steam engine and ICTs, also supports this relatively benign view. Moreover, compared with these previous processes, he expected that the impact of AI on productivity will be this time even more significant than in the past, as the asset base is larger than that of previous technologies. So while not necessarily being applicable to the whole economy, the firm-level evidence that we saw this morning in the second session of the conference on how generative AI affects productivity in specific occupations also shows the potential of these new technologies to revive productivity and enhance our economic prosperity. Professor Monteleone, in her dinner speech last evening, highlighted one of the applications of AI which has possibly flown under the radar until now. That is financing climate change. She argued that artificial intelligence-driven solutions can be implemented for both adaptation and mitigation of AI impacts. This represents another important silver lining of this technology that deserves our attention. Besides impacting productivity and how we deal with climate change, AI will have an important impact on the labor market, but also on how we, central banks, conduct our monetary policy. In our session on the labor market, we learned how AI is reshaping tasks. In contrast with previous technologies, AI has the potential to reduce non-routine abstract tasks and increase high-level routine tasks, like monitoring processes. But we must remain mindful of the distributional consequences, given the unequal impact of skill levels, as noted yesterday by President Lagarde. By the way, it came to my attention that none of you mentioned inequality risk as one of the main risks of this story in the last question by Jesús. So in addition, we learned that AI implementation is driving greater demand for managerial roles where cognitive and interpersonal skills such as collaboration and creativity are in high demand. So turning to our core business in a central bank, we examine how AI-driven investment may react to monetary policy and its potential in generating financial forecasts. Large language models have shown promise, high promise in delivering predictions comparable to human forecasts, especially for the medium and long-term horizons. And if validated, this could strengthen our toolkit in the future. Actually, they may replace some of us here. So, however, we must be aware of some of the risk around. And of course, we have to be meticulous monitoring of AI technologies in the financial sector, where the room for these fakes and fraud is probably particularly high. No? So last but not least, the policy roundtable that we just had the pleasure to follow highlighted both opportunities and challenges presented in AI technology, striking a balance, the right balance between regulation and innovation is going to be paramount in the coming years. While regulation is necessary to protect from unintended consequences, it must not inhibit innovation. This is probably one of the main takeaways from your discussion. So with this, let me again thank everybody involved in the conference for your very insightful comments and papers and discussions. And I wish you a very productive and responsible AI adoption going forward. So thank you very much.